Hi, it's Bruce Clark with Coldwell Baker.
Hi, I'm Justin with Arbor Financial Group.
And today what we're going to do is we're going to talk about both the real estate market and we're going to talk about the lending market. So if you're looking to buy or sell a home, this is certainly a video that you're going to pay attention to, and reach out to us with any questions. Down below we're going to have our contact information, so whether you're buying, selling, or both, we find a lot of people doing both, don't hesitate to give us a call.
Yeah, that's right. So I think what we wanted to do is just bring some really useful information to either a buyer or seller of what's happening in today's market out there.
Yes. My wife Rodnick and I are noticing that it's not just the traditional 30-year loan now. You have a lot of grant programs. We're starting to see a lot of incentive. We're seeing it from the new home builders also. Rate buy downs, they're giving a lot of concessions, things like that. So from your side, what are you seeing on more conventional loans from the rate buy down, and how does that affect a payment?
Yeah, that's some great question, Bruce. So as far as myself, I've been in lending for 25 years, so I've kind of seen all the market shifts. And what's important is when the market shifts, whether you're an agent, buyer, seller, lender, is you have to be nimble. You have to pivot and adapt to that market. So to answer your question, Bruce, is what I'm seeing of helping create transactions right now, whether again you're a seller or a buyer, is the interest rate buy down. So I'll give you a scenario is, with the market shift, we see a lot of sellers having to do price reductions or lowering their price. So what we go to a seller and say, hey, rather, Mr. and Mrs. Seller, than you reducing the price, let's say $50,000 on your home, why don't you credit through escrow the buyer about $15,000 to buy down that buyer's interest rate? So now as a seller, you're walking away with more money. Instead of reducing it $50K, pitch it in $15,000.
Right.
As a buyer, that $15,000 typically gets them 1% lower on the interest rate, and that is a big difference on the payment. So in my opinion, that strategy is a win-win for the seller and the buyer. And what I can leave you with is, I have a lot of buyers I'm working with where they easily qualify for the loan, but that new mortgage payment based on rates is just a little bit out of their comfort zone. So now they have an affordable mortgage, and now they're getting their new house.
So what the rate buy down does, it can benefit the seller, but also as a buyer, you're getting the home you want at the payment that you need, and certainly that you want to make, but that you need based on your finances. So it really can determine whether someone gets a home or not. And what we're seeing, my wife and I, we work with people in Orange County, in San Diego County, in Los Angeles County, in Riverside County. What we're seeing is a difference between a 3-bedroom, 2-bath and a 4-bedroom, 3-bath can be the rate buy down, and that's a big deal. Certainly, if you have the necessity or the need for 4 bedrooms, that's a big difference. To say, hey, we're gonna put the bunk beds in bedroom 3, or we get separate bedrooms, and that's a big deal. Also, you might get a home that needs less work, a home with a bigger lot, and a home in a better location, because some of them are pretty far out.
Yeah, that's a great point, Bruce.
So not only do you have rate buy downs, but you also have things like, you still have variables. You have the 2-1 buy downs, your 3-1, you have 10-6. Explain how that is working, so to speak, its way into the deal.
Yeah, absolutely. So again, I think the message here is getting creative to create transactions for all of us out there. Yeah. So we touched on buying down the interest rate. This again is just making the house more affordable to get that buyer to actually move forward and say, hey, I'm ready. Let's make this happen. Right. On the ARMs, or adjustable rate mortgages, again, I've been doing this a long time. Things come and go in and out of fashion. So typically I pretty much deal with fixed loans. But what I can tell you, Bruce, and everyone out there, is in today's market we're dealing with now, is ARMs, or adjustable rate mortgages, are super popular. So I'll give you an example.
But everybody's really concerned. I mean, 2008, that's why we got into the mess we
did.
It was that everyone was qualified. I mean, heck, I think dogs were buying homes. But the ARM has a really bad connotation or reputation, so to speak. So
yeah, and I think the point there is, us as professionals, whether you're an agent, a lender, is full transparency, putting everything out on the table for the buyer. So an example, if I get a buyer and they want, that $1 million house, but they need to make the payment affordable, I will give them an option. Hey, you can go with your traditional 30-year fixed loan, or what a lot of buyers are doing is, again, like a 5-year fix. So you can do a 5-year, 7-year, or 10-year ARM, which are fixed for that appropriate time.
Okay.
And basically what I tell the buyer is like, hey, if you do a 5-year fixed loan, we just want to make sure we refinance you out of that before year 5 hits, get you into a fixed loan, because I know that in about a year, everyone is expecting interest rates to drop. Fannie Mae has put it out there that next year they expect rates to be at 4.5%. So if that buyer knows that they're going to refinance, let's say in 1 to 2 years, then they're better to go with an ARM, get that lower interest rate, get that lower payment initially.
Right. So it's funny because we've heard this saying: you marry the home, but you date the rate. And so if you're talking a year or two, even 4, if you're in a 5 or a 7 or a 10, 3 to 4 years is not a big deal. I think a lot of people still are. There's a lot of misconception about the adjustables, but there's also grant programs. So let's say a first-time buyer comes in and says, hey, I can afford $500,000 at, let's say, 4.5 or 5%, but I don't have the down payment. What can you do?
Well, what I tell them, Bruce, is we have a solution for that.
Okay. I figured you did.
So again, there's being in the industry a long time, there are a lot of assistance programs, and they all do things differently. So again, if a buyer comes to me, Bruce, and says, hey, I have $5,000 to my name to buy a house, the only way that buyer is going to get into a home is with a down payment assistance program. So there's quite a few out there. To make it easy for viewers to follow, the ones that give you the most money, typically those come with a slightly higher rate. It's not a lot higher, but there's a cost for that money. And then also you're paying that money back in the future, which I always go over with the client. Hey, at some point in the future, whether it's selling, refinancing, etc., you're going to pay that money back. So that is great for the buyer, again, who has $5,000 to purchase their first house. That's the only way they're going to accomplish the goal. There is another very popular grant program, which the grant piece means they do not pay that money back. So we're having,
how much is that?
So they can get up to $25,000, a lot of money. So up to $25K towards their closing costs, and obviously closing costs are not going to be $25,000. So that excess or leftover money, what we do is, going back to the buy down topic, we use that money so the buyer can buy down their interest rate to a much lower rate, much more affordable. So this up to $25,000 closing cost assistance program is based on the area where the home is being purchased in. So it's only Southern California, but there's a lot of areas that qualify for it. So once the buyers start looking at homes, we can verify if it qualifies or not. But it's a really popular program.
So less out of pocket, plus a lower rate.
That's correct.
That's very much a win-win.
Not paying the money back.
So everybody likes free money.
Yeah.
So 2 more things. So we have ADUs, or granny flats, accessory dwelling units, and they're really incentivizing that here in California. So there's a grant program, but also a lot of people aren't aware that FHA has a loan program, 203K, and there's 203Bs and 203Ks. There's so many loan programs. You got to reach out to Justin. It's amazing. That's why we don't do loans. So do me a favor. Talk about the ADU grants they have, and then the 203K for the person who doesn't qualify for the others.
Yeah, another great topic, Bruce. So what I always like to tell people out there in the field is, in especially Southern California, we're pretty much out of land. So when you don't have more land to build homes, what do? You put the accessory unit in the backyard, and it's something that's very popular right now in all areas of California. So to answer your question, is there are loan programs actually for conventional loans and FHA that will allow the buyer to finance the purchase of the house and also the construction and installation of the ADU all in one shot.
And it's all on the same piece of property.
That's correct.
So it's got the lot has to be big enough. You couldn't do an ADU with a condo. So some of the people,
right?
It's not you're going to build another condo. It's you're going to build on a property that has the availability, which is why one of the reasons I think that Santa Ana is doing so well. Santa Ana, we're starting to see a lot of development in Santa Ana, and I think a lot of people have kind of stayed away from certain cities but we're seeing Anaheim has a $4 billion development, so Anaheim's starting to blow up, and we saw Toll Brothers come in on 4th Street, and they're putting a trolley in Santa Ana, and a lot of big money starting to flow in there. So a lot of the homes there are older. My in-laws live in their home was built in the 1920s, and they actually have a cellar. What's neat is on a 1/4 acre, they can add an ADU. So for an income investor, it's called house hacking. You could live in the front. You could even rent some rooms out if you want. You could build an ADU that would be income. Then it would help to, maybe in the future, if you were to get a loan, you could use that income to qualify for more, or et cetera, et cetera. But how much is the grant on an ADU, and what kind of rate are you looking for?
So basically the way it works is, again, whether it's a conventional loan or FHA, is the loan program is financing the cost to purchase the house,
okay,
and also the cost to install and build the ADU.
Oh,
so
wow.
it's all in one transaction. So
wow, okay,
there is no per se limit on how much they can finance in. It's really getting the bids for what the cost of the actual work is, and then that's what's financed into the loan. And then on top of that note, Bruce, it's very popular for ADUs, but on these, as we call renovation loans, people can also put new flooring. They can redo the kitchen. Let's say it's an older home in Santa Ana, like you mentioned, maybe they want to put some energy efficient windows. So there's a lot of things you can do to the house to upgrade it and be able to finance all those costs into the loan.
Which is nice. Certainly, people itemize. You can, it's a nice write-off.
Correct.
The 203K. So I want to buy a home. It needs a lot of work. Gosh, it's the home I want because it's a big home. It's a big lot. How do you do that?
Well, the first thing, they would call Justin and Bruce.
There we go.
And we're going to take care of them. But so basically what happens, I've done many of those transactions. So it's an FHA 30-year fixed loan, but what the different piece of it is you get a contractor involved. So it has to be a licensed, approved contractor, so they get involved, and basically they put together bids and say, let's say for example, there's a house in Santa Ana, it's $800,000 purchase price. The contractor's going to come and say, hey, for this list of work or upgrades the buyer's doing, this is going to be the ticket. This is going to be the price on those upgrades. And then we as the lender, we take the base purchase price, plus the upgrades. That is the final purchase price to us as a lender, and how the buyer finances that all into one transaction.
Okay. So you have the ADU grant, so you can buy a home, get the ADU grant, so you can buy a home, build another unit. You can buy a home, fix it up.
Correct.
Can you combine 2 or 3K with a grant on the ADU?
You can. So some of the
Wow.
some of the
That's a
down
super
payment
deal.
assistance programs, which most of them are for first-time buyers only. But in this scenario, if you're a first-time buyer, you could stack all these different loan options. So your assistance money plus the financing of the upgrades or the ADU.
Okay. So I'm a veteran. Great VA loans. There's a lot of great programs. Do you guys do VA loans?
We do VA loans. That's actually my passion, and anyone out there that's a vet as well, thank you for the service to our country. That's one of the best things I like doing is VA loans, because you really feel like you're giving back to that person that helped give us all these freedoms we enjoy in America. So VA loans are amazing. So when I have anyone comes to me and says, hey Justin, gonna buy a house, I served, whether it's active duty or a vet, first thing I tell them, Bruce, is the best loan option for you, hands down, is your VA loan. One, because you've earned it, and two, VA typically has the lowest interest rates of any loan program out there.
And how much down?
So you can do zero down.
Zero.
Yeah. So
Okay.
zero down. The other really big benefit with VA is most loan programs, let's say conventional loan, if you put less than 20% down payment, you're going to have PMI, which is private mortgage insurance.
Right.
On a VA loan, you can again do zero down out of pocket, and you do not have that PMI or mortgage insurance. On our home prices here in, let's say, Orange County, that's about $200 to $300 per month. The buyer is going to save from tacking on their mortgage payment.
It's like 7 gallons of gas.
Yeah.
So, what's interesting, because what we're seeing is we're seeing a slowdown in the real estate market. We're seeing a lot of homes that are coming off market. So I think as a buyer, and I've said this, it's time to be aggressive with negotiating. There's a lot of good options, a lot of good opportunities, and you've given us a lot of really good ideas. I think you've got the, of course, you have the V loan, you have the 203K, 203B, you've got the adjustables, you have the fixed. I mean, there's so many different things. What would you say to someone, first-time buyer looking, they want to generate income from ADU, they're about $500,000. What would you tell them to look at? Would you think to build an ADU to get some income, or what type of things are you recommending to prospective buyers?
Yeah, so really good question. The way I kind of have always done business is it's really catering to the client. So each client will come to us with a different need. Maybe they want to be a landlord or have an ADU and generate income. Maybe it's just having that first house for their family. So it's really what that client's...
That's right.
Yeah, exactly. And on a note, a lot of buyers I see are doing the multi-generational thing where they're moving in together, and to make it more affordable for everyone, they're putting, grandma, mom, sister in the back. But it's really, to answer your question, it's what the clients need. And the way I would kind of sum it up is, if you're a first-time buyer, a lot of first-time buyers that come to me at the beginning, Justin, I'm nervous, I'm scared, understandably so. They've heard the horror stories at work where unfortunately other buyers working with a different team, or maybe someone doesn't know what they're doing as much, has had, unfortunately, a negative or bad experience. So what I can tell you, when the day comes when we hand that first-time buyer the keys to the new house, what I get a lot of times is, Justin, I was so scared when I first called you.
Right.
This was amazing. I can't believe that it happened. So if you're a buyer out there, like Bruce said, there are so many options available to you, whether it's the assistance programs, the adjustable rate loans to make it more affordable. There are numerous options to make it happen for you, to get you to be a homeowner. So don't be scared. It's all about the team you're working with, and that's going to lead to the great experience that you're going to have.
Now, and I want to give a shout out to Arbor Financial, Justin and his team. We've had family use them, we've had clients use them, have never had any issues. You guys have been fantastic. And I think through all of this, having someone that's gone through the market, that knows the market, someone that's going to be there, that's great at communicating. We were very impressed with you, how you guys keep the lines of communication open, and at every step of the way, there was never a question about where we were at or where the client was at, and we really appreciate that. So we thank you for joining us. We're here at Arbor Financial, and Justin and Bruce Clark, Coldwell Banker.
Yeah, we appreciate your time, and again, hope everyone got something they can take away. And again, if you're thinking of buying, there's never a better time than now. And like I said, with all these options, you really can't go wrong. So, really take that next step.
Thank you.
Thank you, Bruce.
All right. All the contact information's in the bio below. Reach out to us. We'd love to help you make a smooth move to Orange County, Riverside County, San Diego County, LA County. Whether you're looking to make a move in the next 5 days, 50 days, or further out, give us a call, shoot us a text, send us an email.